invite our first guest on the show. We are joined by Rahul Sharma, Director, Head Technical Derivative Research, GM Financial Services. Rahul, hi. Afternoon and welcome to the show. One more muted session in the market that we can witness right now, and broader markets are trying to participate, but then still not there yet. What are your important numbers now as far as the market movement is concerned, support levels according to you?
Yeah, very good afternoon to both of you and the viewers of ET Now. Well, we have been into this sideways consolidation for a while now, and but the big triggers are the three big results which are being lined up on Friday and Saturday, which could bring in some momentum into the market. Now, speaking of technicals, 25,000, 25,300. This is a 300-point range, which has been sort of tough to take out. So 25,300, once it takes out, I think there is a good chance Nifty head towards the 25,800, 26,000 mark. And on the flip side, in case 25,000 gets broken, we may see a very short-term sell-off until 24,800 odd. So my reading is, that the current consolidation should eventually end over the next 2 or 3 trading sessions. But if you look at the bigger picture, we've spent a lot of time in the 24,500 to 25,000 area. This was the previous consolidation above which we broke out, and then finally Nifty was expected to do very well and hit an all-time high. So this consolidation area, there are layers of supports for the market from 25,000 all the way to 24,500, and 24,500 in a bigger scheme of things will be very difficult to take out considering the current undertone of the market. So my sense is be a buyer on dip, look to add at 25,000. In case 24,800 happens, look to add there as well with 24,500 as the stop loss. And once the market starts moving on the upside, there could be a good 1,000-point rally that can be expected over the next 1.5 months time frame. So buy on dip should be the strategy. The results which are lined up should bring in some immediate momentum. And net, we expect markets to do well from here.
So 1,000 point rally is what Rahul is expecting in the near term. But Rahul, I want to understand from you particularly about PSU banks. You have seen the news flow which is coming in for SBI, 25,000 crore, the biggest QIP which is in works. How do you see SBI specifically and also the PSU banking sector?
Yeah, so PSU banks are looking very strong technically. SBI in particular has spent 2 quarters remaining sideways. I think the time has come where we might see a decisive move, especially in the sector leader, which is State Bank of India. So from a positional perspective, we feel there is a good chance of a 10% rally from here. So the next 2 months could be positive for PSU banks. But having said that, I think it is better to stick to the relatively higher alpha names. With the likes of Canara Bank, for example, looks very good at this point in time. The technical setup is indicating that there is an imminent breakout that might happen. So from a very short-term perspective, 124, 128 are the targets that we are expecting. One can look to buy this stock with a stop loss placed at 111. So our advice would be to stick to the relatively higher beta names in the PSU banking space, although the outlook on the entire sector or the PSU bank index is quite positive from the current levels. Second pocket, which is looking good from the mid-cap space, not from the mid-cap space actually, but this is from the power generation. NTPC looks pretty solid on the charts. The stock has been quiet for a while now, but eventually after this big consolidation that we've seen for since March onwards, I think we should see a momentum move coming in. So 360, 365 are the immediate targets for NTPC. Traders can look to buy at these prices. 335 has to be the stop loss. So NTPC and Canara Bank, these are our top 2 picks which can be bought in the current market.
All right, Rahul, I think you've also covered your picks for our viewers as far as their trades are concerned. Thank you so much for being on the show and helping our viewers with their market strategies. But then we move on.